In this special episode of Retiring Today, we focus on the coronavirus and your retirement.
We have seen unprecedented market volatility. We will address your questions and concerns, plus strategies that could protect and possibly even grow your portfolio.
Join us right now for Retiring Today. Welcome to Retiring Today. The coronavirus has caused market volatility like we haven't seen since the Great Depression. I'm here with Lauren Merkel. He's a certified financial planner. Lauren, you're sitting down with families, you're talking to people by phone and using Zoom and all of the things that people are doing right now, and you're talking about these markets because pre-retirees and retirees are watching this. And it can be scary.
Yeah, pre-retirees and retirees, this is the most scariest time for them. This is what they dread because they remember, right now we're having flashbacks of what happened in 2008, which is the experience that we've seen from a market volatility standpoint in our lifetime. But this is even worse, as you mentioned, from the 2008 type of experience. We have to go all the way back to the Great Depression before we see market volatility like this. So pre-retirees, retirees, they're looking at their 401k plans, they're looking at their IRAs, and they're seeing them drop. And the worst part about this is how far is it going to go? Nobody knows where the bottom is, and that helps create this anxiety of how bad is it really going to get, and how bad does it impact their retirement plans?
Yeah, so 2008 is a year that some people can remember. They remember what that felt like to watch that 401k react. How is this similar to 2008? How is it different?
From a volatility standpoint, this is much more significant than 2008. If we look at the top five times that the Dow took from the high to get to a bear market, it ranks number 2. Number 1 was all the way back in 1931. It took 15 days. This time it took 19 days from the Dow to get to the high to the bear market. What the bear market means is that the market has dropped more than 20% from its highs. So 19 days, the second fastest of all time. If we look at the top 5, the other 2 come from the Great Depression, and then the final one comes from 1987, which was Black Monday.
Okay, so we see what the stock market is doing. We see the volatility. Let's first talk about the families that you've worked with. So the pre-retirees and retirees that you've set a customized plan. They're watching this and they're still feeling the losses, but they're not necessarily realizing the losses. What have your experiences been with those families?
Well, that's one of the most important takeaways of having a comprehensive, customized, written retirement plan. And if anybody's been watching the show, we've been talking now for a while about how market volatility is going to come back. We were thinking that 2020 was going to bring some volatility. Now, nobody can predict the COVID-19 and how quickly this market has dropped, but volatility is here. So what we were doing is we're preparing the portfolios, we're preparing their plan for volatility and really the whole goal of the portfolios is when things get really ugly, let's not blow up. When things are good, let's just get a reasonable return, right? We need to beat inflation, we need to beat taxation, and we want to grow it on top of that. But if we can avoid the big drops, not only does that help from an emotional standpoint for pre-retirees and retirees, but also most of the time it ends up putting more money in your pocket because when things do come back up, you don't need nearly as big of a return just to get back to even.
What about those people that are watching that maybe didn't have a customized plan in place or didn't account for a recession when it may hit?
One of the things that we are hearing, and we hear this every time we go through a correction or recession, is just do nothing. Basically, it's like freeze in time, don't do anything. We're going to wake up one day and the market is going to be miraculously back to even. You're not going to lose out because you didn't sell anything. Now, there is some truth to that. There is a vein of truth in that. And what you don't want to do is you don't want to have assets that are down by 30% and then just go to cash and sit on the sideline. That reminds me of 2008. Remember back in, September of 2008? This is when Lehman Brothers went bankrupt. So Bear Stearns went bankrupt and then Lehman Brothers went bankrupt. A whole bunch of people went to cash because the news was saying, and a lot of people were saying, that the banks may not even give you your money tomorrow if you went to try to take out deposits. So people were flooding to cash. The problem is that in March of 2019, just a few short months later, the markets just started to go up and then continued to go up and they didn't look backwards. So when are you going to get back in? And that's really what a lot of people want to try to avoid, but that does not mean that you can't do anything. If you don't have a plan, now's a great time to get a plan in place to see if there are steps that you can take right now to take advantage of the down market and take advantage of the markets when inevitably they do come back up. And even when the markets come back up, now you have your plan in place because there's gonna be other recessions, there's gonna be other corrections and other bear markets that you're gonna have to go through. So what you don't want to do is you don't want these types of environments to be a surprise to your portfolio and be a surprise to your retirement plan.
And when you set that customized plan, you use 5 guiding principles. We call them the Merkle Retirement Method here. And we're going to talk about 3 of those guiding principles today.
One of the hardest parts about retirement planning, I think looking from the outside, because saying retirement plan, that just seems so vague, right? So what we've done is we broke them into 5 easy components, and 3 we're going to focus on today, which is going to be the income piece. And for pre-retirees as well as retirees, that's one of the most important parts of the plan, because you want to know where your income is going to come from now, but also later down the road. When you take your income, you're going to have to pay taxes. Taxes don't go away in retirement. So how do you mitigate the impact of taxes as you transition from the working years to retirement and then beyond? And then the final component that's going to come into play today is the investment piece, and I think that's for obvious reasons.
And that's the conversation we'll continue today. Recession strategies, market volatility, do's and don'ts when retiring today continues.
The coronavirus has sent the markets into a tailspin. Are you set up to weather the storm? Join us for our live online market corrections workshop. We'll discuss how you can take advantage of this increased market volatility. From the comfort of your own home, you'll be able to see if your retirement portfolio is still on track. Sign up online at merkleplan.com.
Has the recent market volatility put your retirement plan to the test? See if your retirement is still on track by scheduling a retirement checkup with Lauren Merkle. During this 15-minute phone call, we'll discuss if your retirement plan could be disrupted by long-term market volatility. We'll also analyze your current tax plan and provide strategies on how to take advantage of the market. Go to merkleplan.com and click Book Now to schedule your retirement checkup today.
Welcome back to Retiring Today. This episode is devoted to the coronavirus and your retirement, the do's and don'ts of market volatility and a recession. Here on the table, we have lemons. And Lauren, I know you follow social media. The good news, maybe the bright spot of all this, is a lot of people are kind of turning lemons into lemonade. You've seen it, right?
Right.
Yeah, people, spending more time with family, doing the puzzle they always wanted to do, maybe the family project or the house project that they've been thinking of. So that's kind of where we're going with the concept on the table here is turning lemons into lemonade. So we'll walk through that in just a minute. But making lemonade when it comes to, I guess, your portfolio, there are some opportunities as you move to and through retirement. And one that you want to talk to people about in this recession, in this down market, is Roth conversions.
Yeah, I mean, we can't control what's taking place with the markets. We can't control what's taking place with this economy, but what we can do is to some degree control what our portfolio does in these time frames. And then what we can really control is some of the strategies that we implement during down markets. So this is the silver lining of having such a depressed market of what we have right now, Roth conversions. And this timing couldn't be better. I mean, we have a down market, a substantially down market, and we have taxes on sale. So if it makes sense from a tax standpoint, what you can do is you can take your pre-tax money and you can shift a portion of it over into the Roth. Now you have to pay taxes on that money when you shift it over to the Roth, but then once it's in the Roth, it grows tax-free forever. So if it makes sense from a tax standpoint this year, then you can shift it over when the market's down. Now you might be asking, why does it make sense? Why would I want to do that when the market's down? And the reason why is because when this market does come back up, you're going to get the growth on those investments, and all of that growth is going to be tax-free. So as an example, let's say you have 100 shares of XYZ stock. XYZ stock 2 months ago was trading at $50 a share. Now it's trading at $25 a share. You take it from your pre-tax, only pay taxes on that $2,500, the 100 times the 25. And then when the market comes back up, XYZ stock comes back up and you have all that growth now underneath the Roth tax-free. So this is something that you want to be careful with. Make sure you consult a CPA or your retirement planner to make sure that you structure this the right way. There's some moving components to it, but if it works for you, you're going to be really happy 5 years from now looking back and say, wow, I took this money, took control over it, paid taxes on it when the taxes were low, and now it's growing tax-free for me forever.
And if that's a strategy that you just heard Lauren explain, and maybe you want to talk directly to Lauren about that and how it could work for you, we've got a great resource for you. It's right on our website, merkleretire.com, MERKLE. Right there, you're going to get sent to a link that goes to Lauren's appointment book. You can schedule a 15-minute retirement checkup call with Lauren to discuss Roth conversion strategies, market volatility, and maybe your retirement plan to see if it's on track. So let's continue talking about what you do in a down market. And I don't mind making lemonade.
Let's make some lemonade. Where's the sugar?
I was thinking the vodka.
Okay, here we go.
Be honest.
All right, so let's make some lemonade. This is another strategy that you can implement because one of the things, like we mentioned before, is that a lot of people say, don't do anything, don't do anything. Here's some strategies that you can really implement to take advantage of the market when it's depressed. And when the market comes back up, you're going to be much happier because the overall net losses should be less by incorporating these types of strategies. This is a strategy we call dollar cost averaging. Now, when you were working, this strategy you implemented, and a lot of people don't even realize it, with your 401k plan, you're putting money in every single pay period. It doesn't matter where the market is. The market's up, the market's down, the market's even, right? You're just putting money in on a consistent basis. But when you retire, you're not contributing to retirement accounts anymore, so it's significantly much more difficult for retirees to incorporate a dollar cost averaging strategy. So this is a way that you can still incorporate this strategy even though you may be retired and not contributing to retirement accounts. Now, really for the last 2 years, what we've been doing for the families we work with is taking some profits off the table. Again, we come from 11-year bull run. Directionally, we felt like the markets were high. So let's take some profits off the table, put it in a safe place where when the market does do what it's doing right now, it's not going to be hurt. And then we can systematically take that money and put it back into the market. And that's what we're going to show. That's what we're going to demonstrate with the lemons. So this is right now what we have. Let's say we have $100 that we have that's safe. It's in this pile over here that's safe. It didn't get hurt by the volatility. Now it's about how do we systematically get that money back into the market when the market's lower. Now nobody knows where the bottom is, so this is different than market timing. We're not trying to time the exact bottom. This is different. What we're trying to do is just get a discounted price essentially.
Okay.
So we're going to take $20 of the 100, a piece of it, and we're going to buy 4 lemons. So they're $5 a piece. We're going to buy 4. Well, that wasn't the bottom. The market for lemons is going lower. So now we instead of buying 4 lemons for $20, maybe we can have 6 lemons total for $20. So we have another $20. The price per lemon went down. So we're putting more of our safe money back in to get more. And we just keep going. We just keep doing it. So the prices of lemons keep going down. Again, we don't know when the bottom is. And we just put our safe money back in. We're just buying more and more lemons. So eventually we get to a place where we have this money in the market that we wanted to put for long-term savings or long-term investing. And now we have all of these lemons. And if you average out the price that we paid for these lemons, it should be lower than what it would be if we just put it all in at one time. So now the market comes back up. And the price for all of these lemons comes back up. And now if I want to sell these lemons to you, you have to pay me more. And that's more than $100, and that's where I make money.
Sure.
So buy them at a depressed price, and then market comes back up. And then if we want to liquidate them, we make money on our lemons, turning lemons into lemonade.
And I think the key to that is you have to have some of that cash to buy the lemons at the low price. And that's, I think, a really important part. You touched on it, but it's a really important thing that you've done the last year or so with the families that you work with.
Well, it's part of the benefits of planning is, life changes, the markets change, the economies change, they change it all the time. But if we don't have a plan not only to protect ourselves when things get really ugly, but also to potentially take advantage of some of these times when lemons are on sale, then we're just riding the roller coaster, right? The markets we know are going to go up, they're going to go down. If we don't have a plan, we just find ourselves riding the ups and downs with no real strategy or nothing really to do to protect and take advantage. And that's by far the biggest benefit of the plan, is not only it scopes out a vision for what it is you're trying to accomplish, but during the bumps in the road, you're protected, and in fact, a lot of times even take advantage of it.
And unfortunately, we don't have any more fruit to kind of use as an example. But one thing that you do want to do in a market volatility or in a recession is to take action with tax strategies.
Tax strategies, especially in this environment where taxes are on sale, we cannot lose sight of any types of potential tax strategies we can implement to mitigate the impact of taxes. We've been talking on this show now for a couple years about how taxes are on sale, some effective tax strategies you can put into place. We feel, our thoughts are, taxes are probably going to go up, and if there was any doubt that taxes are going to go up in the future, the stimulus package had to eliminate that doubt.
$2 trillion stimulus package.
$2.2 trillion off the bat, but they're already targeted another $4 trillion, so that's $6.2 trillion that's basically already pushed in the table. And they're talking about another stimulus package. Before we get done with this, it's probably going to be closer to $10 trillion of stimulus. Our total GDP is only somewhere around 19 trillion. So we're talking about significant amounts of leverage that this country is going to go through, and the only way we can pay that back, or the easiest way that we can pay that back, is to increase the tax rates, especially if we look at where the tax rates are comparatively to history. The 10% tax bracket we have right now, we have to go all the way back to the 50s before we find another one. 37% is our highest tax bracket, which seems like an incredible high amount, which it is. But all we have to do is go back to the 80s, and it was over 70%. Historically, taxes are on sale. They're going to have to increase them. In fact, it's already in the books January 1st of 2026 for taxes to go up, and I think they're going to go up higher. So we have this opportunity when the markets are down to incorporate some really effective tax strategies, but this time frame is going to go, and this opportunity is going to go, and that's the importance of paying attention and having a plan of action in place.
Now it's time for our Ask the Advisor segment. We got a question from George in Ames. George wants to know, what can I do to protect my retirement from future market volatility? We'll answer George's question and much more when Retiring Today continues.
Has the recent market volatility put your retirement plan to the test? See if your retirement is still on track by scheduling a retirement checkup with Lauren Merkel. During this 15-minute phone call, we'll discuss if your retirement plan could be disrupted by long-term market volatility. We'll also analyze your current tax plan and provide strategies on how to take advantage of the market. Go to merkelplan.com and click Book Now to schedule your retirement checkup today.
The coronavirus has sent the markets into a tailspin. Are you set up to weather the storm? Join us for our live online market corrections workshop. We'll discuss how you can take advantage of this increased market volatility. From the comfort of your own home, you'll be able to see if your retirement portfolio is still on track. Sign up online at merkelplan.com.
Welcome back to Retiring Today. Before the break, we had this question for you. It was from George in Ames. George asks, what can I do to protect my retirement from future market volatility? I'm here with Lauren Merkel. He's a certified financial planner. Lauren, what would you tell George?
George, I'd say there's really three main things you can do right now. One is the important part of this downturn is the recovery. And if you don't give yourself the opportunity to participate in the recovery, that's really going to hurt your future prospects from a retirement standpoint. So if you can avoid it, what you don't want to do right now is go to cash, because it's very difficult to hit the market on the way back up if you're in cash. So number one, try to avoid going to cash. Number two, look at some of these strategies right now that we have talked about in the prior segment. Does it make sense for you to start doing some dollar cost averaging, or does it make sense for you to incorporate some Roth conversions? And then number three is make sure you have a plan in place. If you don't have a plan in place, don't procrastinate, don't be paralyzed because of where this economy and market is, because we're gonna go through these environments again, I promise you. On average, every 4.5 years, there's going to be a recession, there are recessions. So throughout the course of your retirement, we're going to see something like this again. And if you have a plan in place for the next time, and the next time, and the next time, then potentially you can protect to insulate yourself from what we just went through or are going through. And maybe you can also take advantage of it with some of the strategies that we discussed on today's show.
Okay, so this episode has been all about the coronavirus and your retirement, the do's and don'ts of this market volatility and recession. So Lauren, let's talk about the takeaways. People probably, and it's hard to do, but kind of need to accept that right now this is the new norm.
Yeah, certainly for right now. I mean, it's really unprecedented for us. We have to adjust. We have to try to not get too caught up from a financial and emotional standpoint to really hurt ourselves when things do get better. But we have to, we can't control it. We can't control it. So now we have to take a broader look of what it is we can do to make it through the times, but also to learn from what we're going through to make sure it doesn't hurt us as bad next time.
And as you think about how to make changes, especially again, we're talking about your retirement and your investments here, I think you would definitely tell people, go slow. Don't do anything too knee-jerk, especially without, at least a second opinion or a professional to help you.
We want to be very deliberate in any of the action steps that you take. Even the ones that we're talking about here in the show, I cautioned you. I said, don't just do this stuff because you heard us talk about it, right? This has to work for you in your situation based on what you're trying to accomplish, based on the resources that you have. So with any of these decisions, especially in this time, make sure they're very intentional, they're very deliberate, and you have the appropriate analytics behind them to support them to make sure that you're doing the right thing for you.
Yeah, and our third takeaway from today is seek help if you need it, or if you have questions or concerns. We're talking about a lot of stuff today, but we've really only touched, your retirement plan and all of the pieces that go into it. So we've got a neat opportunity that we're offering specifically during this trying time, and it's 15-minute retirement checkup directly with Lauren. So if you go to merkelretire.com, right there you get linked up directly to Lauren's personal calendar. You get to schedule a 15-minute phone conversation with him if it's Roth conversions, if it's talking about your retirement plan, market volatility, healthcare, long-term care, taxation, tax strategies. There's a lot to do. And Lauren, you have been doing these phone calls here for the last couple of weeks, and you find in 15 minutes, you can be pretty efficient with people and helpful too.
We can cover a lot of ground in a very short period of time. That reminds me of a phone call I just had. In 7 minutes through, we had covered so much ground, and then we took the next 7 minutes to really try to find some action items that this individual could take to improve what it is their situation is. So the cool part about these phone calls is it doesn't take a lot of time on your side, but maybe you can get a lot of information, and if nothing else, maybe it just kind of provides a little insulation from all this anxiety that comes out to know that you're doing what you should be doing. Or here's the thing that you can consider here, or here's the thing that you can consider there. So very, very little time on your side. It doesn't cost you anything, and if nothing else, maybe it'll help you on your mission to and through retirement.
And so on the show, normally this would be a time we'd say, hey, join us for a workshop. Join us, come sit down, get to know our team, listen to our 5 guiding principles we call the Merkel Retirement Method. Well, we all know that that's not the environment that we're in right now. So like most of the country, we've gone virtual and we're having our workshops now online.
Yeah, we have webinar workshops, and we use a number of technologies to do so. We do offer those workshops or information on those workshops through our website, so you can visit our website to sign up for one of those if you're so inclined. We talk about steps that you can take from a planning standpoint. Again, when we talk about retirement planning, it seems like it's just so vague. Where do you get started? How do you get started? What does it entail? And these workshops are really meant to dig into some of the nuances of how to create a plan, what should be involved in the planning process, and specific action items that you can take to create your customized plan.
And if you're like me, I'm just gonna admit something. I've been scrolling social media more than I probably would want my phone to tell me how much I'm scrolling social media lately. So we have extra time on our hands. A lot of us do. If you're not a healthcare worker, first responder, bless your heart. But if you're on Facebook, like a lot of us are, every Tuesday morning at 9 is a great opportunity to maybe, learn something while you're on Facebook too.
Yeah, we started the Facebook Live every Tuesday morning at 9 a.m. where we're just going to take some of the hot topics of the week, things that happen throughout the course of the week, things that we think might happen throughout the course of the week. And again, just to provide you with information, we turn on these business news networks and they're talking about the market. You see the market going down. I just don't see a lot of strategies that you can implement. I don't see a lot of solutions, right? I just see the market's plummeting. The market's plummeting.
Right. Historic lows, historic volatility.
Yeah, so the whole point of the Facebook Live is to be more on point from a strategy standpoint, things to be thinking about based on what's happened, things to be thinking about based on what we think is going to happen, and it's very timely.
I recently had a conversation with a dear friend who's a pre-retiree, and she said that all of this has her worried that she's going to have to work longer. Are you hearing that, and how are you answering those questions?
Yeah, that's something that's very common in this type of environment is, and by the way, even if the portfolio, we talk about low volatility portfolios, so the families that we work with, they have low volatility portfolios, but they're still tempted to say, wow, all of this stuff is just really big stuff. Can I really retire this year? Can I really retire next year? Are we going to be out of it by that time frame? And this is where I direct people back to the plan. And what this does is it really helps them calm down, really see it from a financial standpoint instead of all these emotions that we get so easily tied up into. And then they can see it. And they can see even if the market's still down by 30%, even if the market's down by 40%, they retire at this point, they can still receive income from this source, they can receive this amount of income from this source, and it lasts for the rest of their life. And so just being able to see that visual from a planning standpoint really helps them kind of guide them through this emotionally rough time and still make the best decisions for them from a retirement standpoint.
This has been our special episode on the coronavirus and your retirement, and we thank you for watching.
The coronavirus has sent the markets into a tailspin. Are you set up to weather the storm? Join us for our live online market corrections workshop. We'll discuss how you can take advantage of this increased market volatility. From the comfort of your own home, you'll be able to see if your retirement portfolio is still on track. Sign up online at merkelplan.com.
Has the recent market volatility put your retirement plan to the test? See if your retirement is still on track by scheduling a retirement checkup with Lauren Merkel. During this 15-minute phone call, we'll discuss if your retirement plan could be disrupted by long-term market volatility. We'll also analyze your current tax plan and provide strategies on how to take advantage of the market. Go to merkelplan.com and click Book Now to schedule your retirement checkup today.
From our family to yours, we hope you have a wonderful weekend.
We hope you enjoy the show.
We'll see you next week.